Today we're talking about SMCI, super microcomputer, the AI server darling that's been riding the GPU gravy train, until it hit a pothole and slid almost 23% in the last 5 trading sessions to roughly $45 a share. Ouch. Investors freaked after a tough Q4 fiscal 2025 earnings print that missed estimates and showed shrinking margins, a real party pooper for a company that's been hyped as an essential piece in the AI infrastructure stack. What actually happened this week? Short version, SMCI reported fiscal Q4 2025 results that came in below street expectations on both revenue and EPS, and its margin profile looked weaker than investors hoped. The market reacted violently, shares plunged, the recent reports put the drop in the double digits, and recent coverage describes a steep sell-off, with headlines calling it a plunge or tanking after the misses. Management also gave a cautious near-term guide, which added fuel to the sell-off. Digging into the numbers, the company reported revenue and adjusted EPS that missed consensus, and the non-GAAP gross margin for the quarter was notably compressed. Management did give a long-term growth target. They pointed to big fiscal year ambitions, but the immediate quarter-to-quarter deterioration in margin and a cautious Q1 view spooked traders. Why margins matter, and why investors got jittery. Think of SMCI as a high-end custom bakery. If your ovens, servers, cost a lot to build but you suddenly can't charge more, or your ingredient costs spike, your profits melt like ice cream on a sidewalk. Gross margin equals the bakery's leftover after paying for flour, ovens, and bakers. When margins shrink, it tells investors either costs are rising, pricing is under pressure, or the product mix shifted toward lower margin stuff, none of which is great when growth expectations are sky high. For SMCI, the margin squeeze suggested either rising component costs, increased competition/discounting, or more revenue coming from lower margin projects, and combined with conservative near-term guidance, traders sold first and asked questions later. Why SMCI was the AI server poster child? SMCI's rise wasn't random. Over the past couple of years, the company became central to the AI supply chain. Its systems are built to house the latest GPU chips, the very Blackwell/H20/other Nvidia GPUs that power big language models and AI services. Customers building giant AI models need rack after rack of GPU servers, and SMCI offers specialized designs, direct liquid cooling, dense I/O, thermal engineering, that make those GPU farms work efficiently. That positioned SMCI as a high-leverage play on Nvidia's GPU cycles and AI demand. In plain English, when AI chips are hot, server makers who can integrate and cool them properly are very valuable. SMCI's product roadmap was publicly aligned around Nvidia's GPU cadence, new systems timed to match new Nvidia architectures, so investors saw a fast path from new chips, new SMCI systems, booming sales. By the way, if you are benefiting from the content so far and want more like this, like the video, it means much to me, or hit the subscribe button and comment the word more. Just go ahead and type the word more so I know. Now that you have commented, let's continue. The Nvidia cycle explained, without the boring bits. Nvidia releases a new GPU generation. Think of it as a new iPhone for AI. The world wants it, data centers buy it, and server makers scramble to build systems that fit and cool those GPUs. SMCI essentially built a business model that says, you want Blackwell? We'll have a rack specifically designed for it the week you can buy the chips. That timing/alignment drives big, fast orders when new GPU generations are ramping. So, when Nvidia announces a new chip, companies like SMCI are first in line to supply complete systems, at least when they can keep up with supply and maintain margins. The risk? If chips are delayed, supply is constrained, or competition undercuts prices, SMCI's growth and margins can wobble. Raymond James, weirdly optimistic in the middle of the panic. Here's a headline that looks like it came from an alternate universe. After the earnings miss and cautious guidance, Raymond James raised its price target on SMCI to $53 and kept an outperform rating. Why would an analyst hike a target amid a sell-off in guidance cuts? Because they're looking past the short-term noise, to market share gains, longer-term AI demand, and the recovery of margins once the immediate issues, mix, costs, timing, resolve. Several outlets reported the price target bump. Translation: the sell-off priced in near-term pain, but some analysts still believe the long-term runway, AI data center build-outs, product wins, and Nvidia alignment, justifies a higher value, hence the raise. That's the "buy the dip" argument in a nutshell. Why SMCI might be poised to soar, the bullish case. Okay, let's be imaginative but grounded. Here are the main reasons bulls think SMCI could rebound hard. AI demand is not a fad. Big models keep getting bigger and require more GPU racks. If the world is building AI models, server demand follows. SMCI specializes in fast-turn, high-density GPU systems. If large customers continue to scale, that tailwind is enormous. Product fit matters, and SMCI has it. Liquid cooling, front I/O options, Blackwell-ready designs, these are not one-off features. They're capabilities that hyperscalers and cloud builders value because they reduce data center cost per training hour. SMCI expanding its Blackwell portfolio shows it's still in the game. Backlog and customer wins can't be turned on and off instantly. If SMCI converted order pipeline before the quarter, revenue could rebound when those systems ship. The company has talked about increasing large-scale customers. If those wins materialize, revenue growth can accelerate. The company also guided to a big FY 2026 sales target, a signal of medium-term ambition. Valuation: living room bargains. After a 20% plus drop, multiples compress. If the long-term narrative remains, AI servers plus Nvidia alignment, the stock could re-rate when margins stabilize or when analysts raise targets, as Raymond James did. Picture this: SMCI is like a rocket that misfired its second stage. It might spin and look scary at T+1 minute, but if the second stage reconnects and the guidance for future fuel demand holds, the rocket could still reach orbit. The market punished near-term wobble, but orbit is about long-term thrust. Imagine data centers as big AI gyms. Nvidia GPUs are the heavy dumbbells, and SMCI builds the racks, the weight racks, cooling fans, and safety bars. If gyms suddenly need more dumbbells, models getting bigger, the rack makers who can safely hold 8, 16, or 32 GPUs per rack become essential. SMCI sells racks, and when gyms bulk up, orders spike. But if gym owners pause because of membership concerns, margins, costs, the rack orders slow, which is what investors feared after the quarter, and we could see Smci soar to $200 in the next decade. Note this as well. And there followed another angel, saying, Babylon is fallen, that great city, because she made all nations drink of the wine of the wrath of her fornication. And the third angel followed them, saying with a loud voice, If any man worship the beast and his image, and receive his mark in his forehead, or in his hand, the same shall drink of the wine of the wrath of God, which is poured out without mixture into the cup of his indignation, and he shall be tormented with fire and brimstone in the presence of the holy angels, and in the presence of the Lamb. And the smoke of their torment ascendeth up for ever and ever, and they have no rest day nor night, who worship the beast and his image, and whosoever receiveth the mark of his name. Here is the patience of the saints, here are they that keep the commandments of God, and the faith of Jesus. Revelation 14 verses 8-12. Fear God, and give glory to him, for the hour of his judgment is come, and worship him that made heaven, and earth, and the sea, and the fountains of waters. Revelation 14 verse 7. I appeal to you to fear God and obey his law. For his commandments are sure and his word everlasting. Do not be afraid, do not be discouraged. Want more information? Please check the description section. That's the end for now. If you have watched until the end, drop a comment like this: I stayed until the end. Just comment that I stayed until the end. When I see this comment, I will give you a heart. 3 more favors I request from you. First, like this video, subscribe and then turn on the notifications bell. If you do this, you greatly encourage me to continue bringing to you insightful information. Do not miss out on our future videos full of insight. All I am asking is your subscription. Thanks for joining us today. Your support means so much to us. Do not hesitate to share this video to help someone who may benefit. I recommend that you watch the next video, subscribe to the channel and share your thoughts about today's video. Wish you God's blessings and care. Wait, watch and pray. See you in the next video according to God's will.